Good morning, everybody. How's everyone doing today? All right, if you can hear me, please let me know. Oh, great. Thank you, Perry. Appreciate that. Hello, Judith, John again, Miles, Perry. All right, hope you're doing good. Had a quick one and done with crude oil. Crude oil continues to be a really great trading chart. I had this extended short this morning here, of course, in the pre-market, and came right back with this much smaller trade, perfectly calculated target right to that 50 moving average before coming off. But that was enough. That was enough to be one and done. 15 cents to the. Had to go to target two on this one. Target one was too small. So target two becoming the primary target, $150 a contract. Doesn't look like much, but there's some money in that trade. You can see $200 at target three, $250 at target four, and done. Currently in a short trade, but that's already beyond the scope of the trade plan. This trade plan is one and done. And you can see power of quitting would have saved this short trade, which has just turned into a losing trade. Important to keep the money you make when you make it, per the rules of the trade plan. Unfortunately, Unleaded was not so lucky. It had that long setup as well. But because of our crossover filter, it came a couple bars too early. This magenta bar points out when we start looking for long trades after the 50 moving average crosses down below the 200. And every now and then you get a setup that comes a little bit earlier. So unfortunately then, the next trade does trigger in, and it looks like it hit its stop as well at 89. It got to 90. If you're actually in this long trade, you should still be in the long trade. I thought it stopped out. But you have a short setup at 92, but with the stop and reverse adjustment, you would adjust that down to 89 as well. And it only got to 90. So it missed getting short. It missed stopping out. And this first trade of the day on unleaded gas is actually still valid and going. And you could even get in sync with it if it pulls back and touches the entry. And who knows, maybe after this first leg, we may get another leg higher. But that is the first trade of the day, and it has barely survived so far. That's remarkable. If anyone's in that unleaded trade, let me know. Or if you have any comments about that, it's kind of interesting. Markets have opened. Let's take a look at the YM. The YM just got long at 34,341. If anyone had a chance to grab that, I don't think, it could pull back, but that's the first trade of the morning for the YM. Whoops. My computer's acting up a little bit here. You can see the two moving averages right between the entry. So if you're in that trade, 371 is the first target. Target two being 387. And the stop would be at 304. And if you're in that trade, let me know. There, it did just come down and hit the entry again. Let's see what it's going to do here. Kind of not a lot of range so far, but finding some support, and maybe it's going to push higher. Money management is at 368. I'll mark that in case it gets there. Move your stop to break even. I actually grabbed that trade myself and looking to hopefully move the stop shortly. Well, it just got as high as 66, so it missed. There it is. So hitting target one and getting to break even. So move your stop to break even if you're in that trade. Hoping it finds support here and makes another leg higher. So unleaded gas is still moving. By the way, if anyone's in unleaded gas, that money management is at 1303. Let's mark that as well. Unfortunately, we hit the one and done. Look at target one, how accurate that was on the YM. I mean, it hit it perfectly at 71. It literally got to 72 and then stopped out at money management. So one and done. And looking at the pound Aussie, that one was one and done as well. That one got long at 8228, hit the minimum target. Well, I mean, it was 18 pips, not so minimum, but it hit it perfect. And then came down and stopped out at money management. So that one also one and done this morning. So pretty efficient so far with the main markets that we typically cover here. Getting it done rather quick. Good morning, Roger. Feel free to ask any questions. I'm looking at this NQ chart here. I pointed it out last week. Bit on the choppy side this morning, as you can see. But this is a unique chart based on the crossing over of the fast EMA over the slow EMA in relationship to exhaustion and balance of power. So this can really get rolling sometimes. And then we looked at the quality of trades as far as how many trades or how many setup bars from the third dot on. And I set it to 2, I believe. Let's double check that. Yeah, so that cleans up the chart a little bit and typically gives a higher quality setup. Really, this is just meant as a learning chart because it fires off a lot of trades, and it's good to get a feel for this kind of setup. The EMA crossover is one of the oldest setups in the book, but when you combine it with the idea of exhaustion levels and balance of power, you can come up with some really nice stuff, although certainly you need a market that isn't as choppy as we're seeing here in the NQ early on. And maybe we'll look at that with the Russell as well. So, of course, in the not too distant future, like in less than an hour, we'll be doing the crude oil report. Yeah, Don, Kevin was having some problems this morning. He had to restart his computer and trade station. And during that moment is when that trade triggered in. And so he put the trade out there. But at that time, it had already gone past and too far. It never came back to the entry. So I told him you can't chase it. You just gotta. It is what it is. It's going to happen once in a while. His system's been pretty stable, but there's no accounting for that. That's going to happen every blue moon, and it always happens at the worst time. Apparently, I'm sure you could relate because we've all experienced that kind of thing. But once it was over, it was over. I mean, what are you going to do? Hey, Mark. Mark asking about the size of the charts here. So, Mark, we're looking at range bars. On TradeStation, it's called a momentum bar. On Ninja, it was just a range bar. And on the YM, it's a 14-point range. So I'll just open it up for you so you can see momentum bar 14. I'm not sure if you're aware of what that is. So on Ninja, let me know what you're using, Ninja or TradeStation. But every bar is 14 points. So it's not a tick chart per se, although every bar is 14 ticks or 14 points. In fact, all these charts are range bars. When we do the crude oil report, I'm going to use this chart here. Well, we didn't look at soybeans. Let's look at soybeans, but let me just finish what I'm saying to you. So with Counterpunch, we're going to use this 377 tick chart. Yeah, so I mean, Thinkorswim has range bars. They're just really difficult to work with, and they're actually you can't really use them. They're very flaky because what one of the odd things about Thinkorswim, it's not even odd, it's just a flaky thing of Thinkorswim, is that it'll start printing trade setups while the bar is forming. So this bar, look at the YM on the right. While this bar is forming, sometimes it might give you the condition of a setup, and then it goes up, and then it cancels, and up and down and up. That's bad. We don't want anything that has to do with a bar that hasn't already closed, because once that bar is closed, it's permanent, it's forever. But while it's forming, anything that happens could change, right? Because the bar keeps forming. So with Thinkorswim, there's no way to do that. It's going to put the indicator on the bar that's forming. And unfortunately, that's just one of the many things about Thinkorswim that kind of make it a garbage platform when it comes to charting. So if you look at this long trade here that we just were in with the YM, while this bar was forming, maybe it gave you a setup, maybe it didn't, I don't know, should have. But what if halfway up you had the conditions of a possible setup, and then ultimately it comes down and closes below the balance line and then closes, and you still have a setup to go long? Then if you restart your chart, that setup's going to go away. So there's repainting. You're going to have repainting when you have setups that happen while a bar is forming. And we don't want that. I mean, basically garbage in, garbage out. That's the definition of garbage. You understand? The way this strategy and all my strategies work is a bar has to close first, and then the condition is either met for a setup or it isn't. Yeah, okay. No worries. Now, you can use a tick chart. I mean, that seems to be the problem with range bars, but not necessarily the problem with other types of charts with Thinkorswim. All right, quick look at Counterpunch. You've got an 830 setup here. Wow, lots of bars. Right here, this purple trade. And it probably goes too fast. Yeah, this trade I would guess is too fast to grab because 3 seconds later it's already below the entry. So we don't count that. So then you have this next trade. And that's at 39 seconds into the session. You definitely have time to grab that. And so that gets short. You're not going to get long here. You're going to stop and reverse adjust. And actually, we're using hybrid mode on this, and I really need to have that on this chart. I don't know why it's not on. Hybrid mode means you don't take a stop and reverse against the color. So the color is red, you're not going to stop and reverse to blue. So that keeps you short. See, that's the reason we use that technique. And so soybeans, look at how it just comes straight on down. You have to ignore all these other setups. We don't care about them. We only care about the one we're in. That's one of the things you learn with counterpunch. But look at it hit that perfect target. So it hits target 1, target 2, target 3. And just like the ES, it's $50 a point, $12.50 a tick. So target 1, that's 2.5 points. Target 2, that's 4 points, $200. And target 3 is 5 3/4 points. It's almost 6 points. So 200 and what's that? 287.50 or something like that, I think. Yeah, not bad, huh? So soybeans is that's a nice trade. I mean, literally, you're done in 2 minutes. 2 minutes, you're done. Soybeans has its appeal. If you could stay disciplined, learn how to execute it, stick with your power of quitting, don't worry about the rest, wins a lot. It's been doing this for years. It's a good trading market. And this counterpunch trade plan has kind of done the same thing for years as well. I wonder where Bill Miller is. You guys remember Bill Miller? He was with us every day for so many years. And one day he sent me an email saying how much he's made trading soybeans with counterpunch using his trade plan, the same one I just showed you. That's all he does, and he's finished in like no time, most of the time. So here we are years later. I don't know what happened to Bill, but I do know that the plan still works, as we can see clearly. So the NQ kind of dealing with a bunch of choppy price action, finally breaking lower. And one of the problems of a moving average crossover is when you get this kind of price action. It's often not very good. So one of the ways to filter out some of this is you look for the higher trend, you look for angles, and you come up with other ways to trade this based on other pieces of information. So I haven't really explored this that much because, well, I just haven't. There's a lot you can do with this setup. Sometimes you need an additional ingredient, unless you just happen to recognize a chart that's just swinging up and down really well, and then you could put this on there and use it. But like you can see the up and down zebra stripes on the Russell, not the time to use that setup. Roger, so you remember Bill Miller? Yeah, you were around when Bill was here, obviously. He was like one of the mainstays. So I'm going to be in here for a short time, maybe another 20 minutes or so. Then we'll close down and reopen for the crude oil report. This is a great time to ask questions or explore anything that's on your mind, anything that you need help with, or whether it's trade planning or fast testing or swing trading or whatever. Just this is your time. So don't be shy. Quick look at this crude oil plan. This one typically starts at 850. It's a long plan. This one's as old as that soybeans plan using counterpunch. And here we could see at 850 the short trade. This one does not use this chart, this line. It's standard mode, and it has a partial profit on the green trade. Remember, target 2 is the objective. So trying to get to 23, and it got as low as 25. And look at how the quarter century number stopped it in its tracks. That's pretty common with crude oil. That's a pretty tough number to get through. We often see the price struggling around the zeros, the 25s, the 50s, and the 75s. So partial profit on there. Still need another trade. That brings us to the long trade right at 9. That's when the spotlight trade plan is beginning, and that one comes up and hits its target. Small target, 13 ticks, and then finishes up around in here. And 2 trades, 377 tick. Gets the job done with crude oil, power of quitting, and now we wait for the crude oil report. And unfortunately, look at unleaded has just been tough. Missed stopping out by 1 tick, came all the way up, and a pretty large target won, 53 ticks. Missed money management and came all the way down again, and then did stop out. So not friendly today. First trade losing, and again, the second filtered out trade before the crossover, 1 bar before, and it would have been another winner. So the filter has eliminated this winner and that winner. And that is the double-edged sword of a filter. Of course, this has also been very effective at saving us from a bunch of losing trades, and we always like it when that happens. So you take the good with the bad. So unleaded gas, still trying to get it done. First trade losing after it gave us some false hopes here. Barely hanging on, barely missing, and then stopping out. Tough. That's a tough, bad beat. Oh, no kidding, John. Yeah, unleaded goes through. I mean, it's great, and then like any chart or any trade plan, you get that one step back. It happens. It doesn't always feel nice. Certainly doesn't look nice, but it happens with everything at some point. Yeah, there's always one, isn't there? It's hard for everything to win, but it also points to the power of diversification. If you've got one or two or even three day trade charts with that are like different, you don't want one to conflict with the other. You have to make sure you could execute on all of them perfectly for this to work. But if you have two or three good day trade plans that have their own cadence, their own rhythm, their own way of growing equity over time, it all smooths out. So you hit a rough spot with unleaded, but perhaps your E-mini or your Forex or whatever your second or third market is does well. There'll be times when you win on all three. It'll be rare when you lose on all three. That doesn't happen very often. It can, but it's rare. But most of the time, you just let the rhythm and cadence of each trade plan do its thing. And over time, the diversification smooths out your equity curve. The important thing is to not try to do too much. And to make sure that the plan itself is serving you well, in that you're able to execute it properly, because it doesn't do you any good if it wins and you're unable to execute on the trades. That's not helpful. Good morning to you, Al. So, if many of you have probably heard, if you've been hanging out in the Trade Hacking Club Discord channel, for example, or if you've just mentioned or heard me mention, here in the room, I've been working on a new Catapult Trader boot camp that I'm going to be announcing fairly soon. It's pretty exciting, and it's all about energy futures. And I'm using the Catapult Trader that you guys have known about, and it's working really well. I'm really excited about it. And I'm exploring different time frames for crude oil, which I've, now that we're up in the $65 price, $65 a barrel range, some of their charts are looking really nice. Actually, a slower chart, and I'm wondering how it would do with Spotlight and Counterpunch too. And my hunch is it would do pretty well. With Catapult, I've been really impressed with a 10-tick bar instead of an 8-tick. So what I like about it, of course, the trades are larger, and Catapult gives you that type of trade where the trade looks like it's been flung from a catapult. That's kind of the point. But the 10-tick bar is producing trades that are just given some really fat, juicy profit factors over 2.5, for example, and the net profit per trade. If you can do $50 average net profit per contract, per trade, when you net out all wins and losses. I mean, that's like the benchmark number that we use to compare. I've often done in the past sessions or training sessions where just that $50, that's 5 cents. It seems like nothing. If you can average that $50 average net profit per contract, say you start with 20 grand, you risk 2% of your account, you can grow a $10,000 a month income for yourself by the end of 24 months. So you do that for 2 years, and that's a piece of work, obviously. It doesn't trade by itself, but you hit your goal, you quit. You hit your goal, you quit, just like we do. You average that $50 per contract when you net out all wins and losses. Doesn't seem like much, but it's a good thing to keep your eye on. Doesn't mean that you can't do that with $40 a contract, you can, or 60, it's even better. Just depends. $50 is just a nice round, clean number to use as a measuring device, so to speak, just to kind of keep track of how you're doing. Well, what I'm learning with Catapult and these slightly larger bars, I'm seeing average net profits of well double that or triple, even almost quadruple, like $200 average net profit per trade type of thing. Big winning percentages. That's amazing if you can maintain it. But those are numbers that you always want to keep your eye on and make sure that you can at least maintain an average net profit so that you can grow your position over time. You don't have to beat yourself up trying to do it. It's okay if it doesn't seem like as much as it should be. It's hard to find a chart that can make $100+ a contract per trade on average over hundreds of trades and maintain a high win rate. A lot of times you'll see win rates that are like 55, 56, 58%, not even quite 60%, but they deliver juicy net profits over time because you have higher targets, right? Those are the kind of trade plans where you don't win as often, but you win more when you win. There's other styles. Usually we try to hit that somewhere in the mid 60s on up as far as a winning percentage, and that often results in a smaller net profit, but you win more. So psychologically, that's good. It just depends on the trader. But it's important to understand those kind of metrics when you're trying to figure out your own trading plan for yourself. What is acceptable for you? What could you live with? Could you win a little less, but you make more as a result? Do you want to win more, make a little less, but then let the power of compounding work for you? I mean, these are personal decisions everyone has to make. But when you see a plan that can do both, that can actually win more and win more often, that's special. It's not easy to get. It's not easy to find. If it were easy, everyone would do it. Obviously, everyone tries. Not too many people succeed at it. When you find it, doesn't mean it's going to last forever either. Nothing does when it comes to trading. But if you know those numbers, you could, as a trader and running your own trading business, so to speak, constantly be trying to find it. And when you do find it, stay with it. Stay with the winning horse. That's always what I'm looking for. And so I'm excited about Catapult Energies because it just fits. It fits like a glove. There's a lot you can do with it. Very simple approach. So I'm getting excited. I haven't done anything new in about a year. It has been a year, actually. It's been a year. It's been a year since COVID slammed into us, and shortly thereafter, the Catapult Trader was born with the ES and the YM. And now I'm looking at how we could use it in other ways, and energies, crude oil, unleaded gas, heating oil, even that gas just works great. Fits like a glove, and it's not even with time-based charts. It's using some of these charts that we're using with the other strategies like momentum bars and tick charts. It works on time-based charts too. There's nothing wrong with time-based charts, really. It's a different kind of dynamic, but The thing I don't like about them is it just takes too long. I like to get done fast. So anyway, just rambling here, filling the dead air with thinking out loud and sharing with you some of the stuff I've been working on. And I'm posting some of those trades on the Discord channel. I know I've kind of been silent the last several days. I've just been really busy trying to get stuff ready so I can get this out to you guys and launch this Catapult Energies. It's just been a lot of work. So I'll try to get some examples again out on the Discord channel for you to check out. It's pretty exciting. All right, so while I've been jawing away, there's been some questions. Let's see, JDS, how would you set up for longer trades using longer time frames? Yeah, so JDS, I'm not sure if you're referring to a day trade or a swing trade. When you say a longer time frame, I think you're okay. So now I'm looking at 4 hour with MT4 and Forex. Yeah. So it's, I always start with the 3-step sniff test. Are you familiar with that? The 3-step sniff test. It's a really great formula, a great method for quickly assessing a chart and determining if it's worth further investigation. Because creating a trade plan, back testing, all the things you need to build something so that you can prove it to yourself is very time consuming. And a lot of the time is spent with markets, charts, time frames, charts that you end up discovering are not worth doing after putting in a lot of time. And that can be frustrating. So you put in a bunch of time on this chart. It seems like it's maybe good, but after further investigation, you realize it's kind of not so great. And you just spend hours or longer. So I came up with this approach called the 3-step sniff test. And the whole point of it is that you can economize your time and quickly use it to discover the best charts that you should put more time and effort into creating a trade plan with. You see? So the general answer to your question is to learn the 3-step sniff test. Now, when you're swing trading, you kind of have to think a little bit outside the box because the 3-step sniff test was originally created for day trade plans. And the first question is, are there enough trades during the allotted time that you want to trade? Your start time, your stop time, are there enough trades? It's an easy question to answer. You look at 10, 20 sessions really quick, see how many trades there are, and determine if that's adequate. Even one trade a day, if it wins a lot, maybe it's a second chart, or it could be enough. You have to decide that. Imagine yourself trading it every day because in the end, you're the trader. It doesn't trade by itself. So then the second question is, are the trades an appropriate size? If you're going to spend that time working with that chart and those trades, are you going to make enough money? Are the targets large enough? Are they too small? Is it too noisy? Is it too many trades? Are they too large? Is it too much risk? Now with Forex, you can certainly adjust your position size. It's not as big of an issue. But if they're all small, if they're too small, that's an issue. Can't make any money after spread. And then the third question, that's why it's called the 3-step sniff test. You're trying to determine if you can quit with a positive session a majority of the time. And this is where the answer comes from for you. But with a swing trade, you're kind of just thinking, instead of quitting your session positive, you just want to win more trades than not. So when you're talking about a 4-hour chart, that's a very difficult chart to trade, just so you know. I want you to imagine your life having to deal with your charts every 4 hours. Because let's just say you get a setup bar and it doesn't trigger in, right? Okay, so now what? You place your order. Another 4 hours passes, another bar, still doesn't trigger in. Okay, great. Another bar, Another 4 hours, doesn't trigger in. Now you're 12 hours into your trade. What about another bar? What about another bar? What if it takes 13 bars before it triggers in? I don't know. What if on the 8th bar it cancels in the middle of the night when you're asleep? What do you do then? Trade's canceled, and then it comes up and hits your entry. It triggers you in, and then it goes down and stops out. But the truth is, the strategy did its job because it canceled before it triggered in, but because it was 8 times 4, 24 hours worth of having to monitor your chart, and then it cancels. You get into the trade not meaning to. You stop out and lose on a trade when the system didn't. Okay, that's one trade. Now imagine it, the next trade. How about the next trade? What about 3 weeks later? What about 3 months from now? Really? Do you think you're going to manage a trade plan like that? Think about it. And I'm inviting you to interact with me on this, but I want you to imagine trying to handle a chart with that kind of dynamic into the future. Can you do it? Do you want to do it? I think those are valid questions. Most people don't realize how a chart or trade plan is going to affect their life until they're actually living it. Do you want to be driving to a dentist appointment and have to pull off the side of the road because you got an alert on your phone that you need to do something with your 4-hour chart all of a sudden? Is that the kind of life you can imagine for yourself? Over and over and over at any time? Think about it. So the big answer to your question is use the sniff test, determine if you could win, and then take those trades and pop them into the UTA spreadsheet and build a log of trades and see if it's going to make you money. But then the next part of that is, can you execute on those trades consistently per the plan that you just tested? Can you do it? Those are all valid questions, and you could save yourself a lot of grief by thinking about it first, answering them honestly, and imagining yourself running that trade business in such a way, and then figure if you want to spend more time working on that or not. You save yourself a lot of grief if you just use process of elimination and get rid of all the stuff that isn't going to work for you. So that's why you want to think about this very carefully. Does that make sense? JJC asks, the account used for account orders and positions has been changed. Could you please suggest who I can reach out to for assistance? The account used for account orders and positions. Wait, I'm sorry. I missed your first comment. With the new TradeStation account, I'm having trouble setting CPT up properly. I also get an event detail message. Well, okay, so your event, we always get error messages with that window. I don't know why, but you just ignore it. The question is, can you place trades or not? So when you're saying you're having trouble setting CPT up properly, that I don't know what you mean. What do you mean? Do you see the trades on the chart? I'm not exactly sure. I need more information, Jim. Not exactly sure what the problem is that you're having. I could ask Kevin to get in contact with you and help you get it set up properly. if you need help with that. All right, so we're getting to the point where I'm going to end this session in a couple minutes here and then restart it to do the crude oil report. So Jim, why don't you send me an email? Actually, you can send it directly to Kevin. Send it to me, and I'll forward it to him. I'll tell him to get in touch with you. because I'm not sure what the issue is that you're having. So I'm assuming you sent your customer number in to have the system activated. JDS, he's referring to the pound yen, which is a very unique plan. And what's interesting about it is it only uses the 4 p.m. and 8 p.m. bar based on New York time, the 4 p.m. and the 8 p.m. bar for setups. And it's in trend mode. So with Counterpunch, hopefully you know what trend mode is. And it uses the ATR formula for entries and stops. So it's definitely Counterpunch Trader, not Counterpunch Express 2. It has some of the more advanced tools from Counterpunch, and it's been working for many years. Wins a lot. We use it in our Spotlight FX Alerts swing trade service. I did make a modified version of that plan for CPX2. It's slightly different. It's also pretty good. So depending on what you're using, you'll find either one of those plans on their respective member sites. Just look at the Forex trade plans. You'll see it. You'll find it there. It just so happens that that particular chart and trade plan is just fit like a glove, and it's worked for many years. They're not easy to find. It's not easy to find a trade plan like that, but they exist. So Jim, if you just send me your info, Kevin already is aware that you need help, and he'll get with you. JDS, no worries. But I do want you to think hard of the questions I asked. And also the 3-step sniff test, just to finish on that. The whole idea is if it smells like a duck and walks like a duck and quacks like a duck, then it's not a pigeon. It's a duck, right? So with the 3-step sniff test, we want it to smell like a winning chart. So you could see it. You could see the trades. They're appropriate, and you can quit positive most of the time. You want to see that first before you spend too much time with the chart. And then you go through the serious back testing and building that proper foundation, because you really want to prove it to yourself first, and you want to see, despite some ugly trades, that the equity will still go up and up and up if you just execute. And you want to see those winners come pouring in despite some trades that lose, because that's what's going to build your belief so that you could actually trade it for real. But when it comes to the time aspect, I want you to pay attention to that and think hard on it. Yeah, scalping's difficult. Scalping is not an easy thing to do either, because your stop loss is actually often bigger than your targets. Scalping is a loose word. I have a new scalp and run technique that I'm developing with Catapult because it works really well. But scalping presents problems. I learned that the hard way. I had like a 28 or 29 trade winning streak, and then had a few losses in a row and basically saw those profits evaporate. That's the problem with scalping. But when you put the runner on there and you could hit the home run trade also, it helps insulate you. So there are ways to do it, but it's, I think what's important is to go back to step one and follow the steps to trading success guide. Yeah, the broker, trade costs are very real. So choosing what to scalp is very important. Very important. But everything that I think you need is in the steps to trading success guide, regardless of what you choose to trade. Because if you go through that guide step by step, you come out the other side really strong and with something that's really going to work for you, that you believe in, and that you've given yourself the gift of the higher level point of view, the forest from the trees point of view. So I think that's more important even than trying to figure out whether you're going to scalp or trade a 4-hour chart or this or that. I mean, going back to square one and doing it right step by step, I think is super important. That's what I would recommend to you. All right, so I got to set up for the crude oil report. I'm going to end this. Hope you guys enjoyed the session, and hope I see you in the next few minutes with our crude oil report. So until then, see you in a little while.